What is up, fraud fighters? Okay, today's conversation is one that sits right at the intersection of banking, innovation, fraud prevention, and governance. Because right now, we're watching something new emerge in financial services. For years, we've talked about AI in banking as a tool, something that, answers customers' questions, summarizes transactions, or helps investigators review alerts. But the next phase of this evolution is different. We're moving towards agentic banking, a world where AI isn't just analyzing financial activity. It may actually help initiate or influence transactions. And when AI can move money, the conversation changes. Now, we're not just talking about innovation. We are talking about trust, governance, and accountability. Who authorized the transaction? Why did the payment happen? And if something goes wrong, who owns that loss? So to unpack this, I'm joined by two incredible guests. First is Tyllen Bicakcic, and I did say that right. I asked him 100 times to make sure, just to be clear. So co-founder of Payment AI, who's working directly in the emerging space of AI and payments infrastructure. And then joining us from Sardine is Lisa, head of AML Compliance Solutions, who brings us the compliance and regulatory lens to this conversation. Because while technology may move quickly, governance and accountability still matter. Today, we're going to explore what agentic banking actually means, how institutions can design systems that are trustworthy, and what regulators and compliance teams are going to care about most as AI becomes more embedded in financial services. So, Tyllen, Lisa, thank you both so much for joining me today on this conversation.
Thank you, Haley. Excited to be here.
Thanks for having us.
Of course. Okay, so let's just dive straight in. Tyllen, we're going to talk through, what is agentic banking? You and I had a conversation very shortly after I came on to Sardine, and you're like, hey, I want to talk through this, and what do you think? And I was like, well, this actually sounds really pretty cool. It's scary, as the fraud fighter who's like, I don't know what access I want people to have, but let's just level set with the audience first. So when people hear the term agentic banking, what does that actually mean?
Yeah, great question. For us means AI that moves from just answering questions at a bank to taking the actions a regular banker would for a customer or that a customer might take on their online banking experience. So how do you go in and as a bank give almost this chat GPT-like experience that goes even a step further of, hey, look at my accounts, hey, tell me my balances, but also, hey, make this payment. If I'm a SMB, go and pay my vendors, all of this fun stuff. So getting banks to enable that experience for customers is what agentic banking is all about.
I really like that perspective, and I like that it will, it has the opportunity to maybe learn from you, but where it's, I can't tell you how many times I'm like, oh my gosh, I have to log into 2 different banks in order to send money, or I have to, if I want to send money to my kid, even that's kind of a struggle where I'd love for it to, automatically do something for me that even just a simple prompt can get it to do what I need it to do each time. And yeah, I just love that idea.
Yeah, it's like every bank should have a chat GPT-like experience inside. And then how do you do that safely? How do you make it be more valuable than just asking chat GPT, certain questions? That's what you build with agentic banking, and doing it is very tricky. It requires a lot of complexities around what we're talking about today with fraud and all of this fun stuff. So, as I think all of us can kind of imagine, we will probably be prompting our banks to do a lot of the things you just mentioned, Hale.
100%. Before we jump into the episode, I want to take a quick second to share something personal. As a lot of you know, I recently joined Sardine, and I don't say this lightly when I tell you I'm kind of obsessed. It actually started back at Money 2020. I sat down with the Sardine team for what I thought was going to be a standard demo. I've even brought a fellow credit union fraud fighter with me because honestly, we were ready to interrogate the product. Instead, we sat there with our jaws open like, wait, what? Watching cases update in real time, seeing OSINT pulled directly into the case without, clicking 10 buttons or jumping between tools. It was one of those moments where you realize, oh, this is what it's supposed to look like. And here's the thing. The tech was impressive, but what really stuck with me was the way the team interacted, the way they talked about the problems that they're trying to solve. It felt different. And now that I've been here for a little over a month, I can say
that it wasn't for show. This team is smart, driven, and genuinely focused on fixing gaps that fraud teams have been living with for way too long. I'm really excited about what we're building, and I can't wait to bring you along for what's coming next. In the meantime, you can check out more at sardine.ai to learn more info.
What is actually the difference between the AI agent and from the AI tools that banks are already using today? Because we do have some chat functions, right, in our banking, but sometimes that's going to an actual person, or maybe it is just, it's kind of filtering you into a queue based on whatever your questions are in that chat. So, what is the difference between, what you guys are bringing to the table versus what banks are already using now?
I think it's kind of the easiest way to frame this is it's similar to like when online banking first came about and you had your total online banking providers that would reimagine what the banking experience would look like on mobile and on web. But then you still had your customer support providers as well that would still come in and provide a new version of what support might look like online. And that's where you start getting the differentiation between the Q2s, the Alchemies, and then maybe like the Five9s of the world and the ones that handle more of that customer experience. I think that's the same thing we're seeing with AI agents playing out in banking. You're always going to have AI agents that will be able to handle more and more support requests and to be able to help on the customer, side of things. Oh, what does it take to actually build an AI agent that can do more of that banking experience and move from just being that, sometimes frustrating little box in the right corner that you really don't want to interact with, to moving that and saying like, we're going to be the entire front-facing experience now. This is where things will be heading, and who will be the technology provider or someone that can make this safe, reliable, and trusted. And there's a lot that goes into that. So that's how we think about it here at Pitt.
Love that. And I can't wait to unpack that more with you and Lisa. I know that Lisa's going to bring an interesting perspective to this conversation as well. But I am all for real world examples. I love making things practical whenever we think about them. So I'd love to know what types of tasks could AI agents realistically handle inside financial services. So, when you think about agentic banking, what's the simplest real world example, like a community banker or credit union, practitioner understand that this is an example of what it could do?
Yeah, great question. Again, on those levels, like it's helpful to think of use cases as intents. Like your customers come to your bank with an intent. And oftentimes all the bank sees is the final transaction that happened online, but they don't know the why of why a customer is coming to do something in the first place. I can rattle off hundreds of ones that we've seen even with our banks in production right now, but just like a very fun one is imagine you're a college student and you want to save for a Taylor Swift concert. How does your banker, is this even going to be a question you're going to go to your banker and ask? Maybe not, but you will call the, automatic transfer savings API to move money from checkings to savings. But a real life use case is knowing what the intent is behind why this person is even doing that. So if I want to go to my community or regional bank and I'm a college student and I start trusting and start saying like, hey, I want to save money for a Taylor Swift ticket. It's going to be $600 and it's 4 months out. Can you help me do this? In which case the AI looks at all the previous transactions, helps recommend where the student can cut down on some costs, and then also prompts them to say, do you want me to set up some automatic savings for you so that we can help you reach this goal? Those are things that traditionally you don't see in online banking. You might not even traditionally see this in the branch anymore, but you can bring these experiences back. And that's just one way of, moving from how can this AI help me to the AI going out and actually taking the actions to do that. But we've been going to many of them, but this one is always like the fun one and just was a very interesting one to see. But this is the kind of information you get when you can get this kind of insights brought to your bank.
I like that, and I really like the fact that we're going to speak truths on this podcast. And you maybe won't go into your branch and say, hey, I really want to save for these Taylor Swift tickets, because if you're like me, you might be afraid that you're granddaddy knows the president of the bank, CEO, and they're going to say, are you sure that's where you want to put your money? And, yeah, I do. But maybe it is an easier way to kind of cross that threshold of, and then once we learn, maybe we start building good habits. But I can definitely resonate with the, maybe I want to go a different route of asking instead of a person. I'll ask the AI, hey, how can I set this up to automatically do it? You take it out. That way I don't see it and I don't spend it. Yeah, but I love that. I love that perspective.
I think you'll be more comfortable asking an AI certain things than you will a human. And I think generally what helps unlock more of the things you're comfortable about asking is what can this AI actually do? I can probably tell you within coding, just because my background is also as a developer, more and more junior devs have probably felt more comfortable asking a Claude Code or a Cursor or whatever AI agent coding tool there is, questions that they wouldn't feel comfortable asking a senior developer because they don't want to feel judged. And I can tell you, even it says we speak honesties, it's even with my own, I know my wife would much prefer asking an AI agent sometimes about financials and coming to me and being like, hey, what should I do? And if there's something there that can guide her and is more accessible, then that makes the whole experience better. I think this is a real opportunity for the first time to bring what traditionally community and regional banks have had, which is that trust and that relationship, and bring it back, but without having to always be at the branch, because we know that that's starting to not be as prevalent. But how do you then meet people where they are? And this is a great opportunity to do that.
For sure. Banking the people of tomorrow, right? We can't just rely on the old ways, and that's how we've always done it, because you're not always banking the ones who've always done it that way. You're banking their children or their grandchildren. So I think that is just a phenomenal way to look at it. And Lisa, I'd love to ask, your perspective first on everything Tyllen's just mentioned on agentic banking. Coming from your experience, is there anything that makes you either really excited or really hesitant about this way of thinking?
Definitely excited about sort of any movement forward in the context of how financial services are provided and accessed by consumers, especially coming from Canada, where I am and where I've worked for many years. We sit far behind a lot of these innovations. Even kind of basic open banking frameworks are kind of still, definitely a work in progress. And so I'm always a fan and always supportive of sort of moving forward and pushing for better accessibility in financial services. And I think what's interesting about how this is positioned is it gives the banks or the financial institutions, the fintech, an opportunity to almost curate the experience and maybe help consumers and businesses access the services in a way that's going to be more efficient and more effective. But in terms of nervousness, sure, there's always a lot of questions to ask, and we want to make sure that, especially when it comes to moving money and holding money for consumers, we're doing it responsibly, and not inviting consumers to use a tool that might expose them to additional risk. And I know we'll get into a lot of the details there later on.
Yeah, I am really excited for that segment within this episode. It's going to be really cool. And that's all we're going to do to tease that up. But Tyllen, you also mentioned, that trust aspect. And so the trust engine, infrastructure for banking, because fraud prevention isn't the product, and trust infrastructure, though, is. So traditionally, fraud tools, right, look at activity after it happens. That's what we've seen. It's all about the detection or the afterthought instead of that preventative model. But how does agentic banking shift that model, do you think?
Oh, that's a phenomenal question. There's a lot of ways. We've been doing this for 2 years now, trying to figure out how do you trust AI with money. And we've done many iterations of payment to get to this point where we're working with banks to do that. I think just baseline is trust already exists at banks. That's number one. If a banker is going to deploy a technology to their consumers, those consumers will probably trust an AI experience more at their bank than they would going to ChatGPT and doing it. I think for a lot of consumers, their first experience with AI might be at a bank with this, because I know many people. I live in a small town here in Durango, Colorado, and if you ask people about ChatGPT or anything with AI, they are very prideful that they try to avoid it, right? Like that's just how a lot of the world is too. And if your bank is to deploy something, that's number one with trust. The second thing is we talk a lot about being more reactive with fraud, right? Like this transaction just happened. What caused this transaction to happen? You do your banking through an AI. The chain of thought or the reasoning for why this transaction even happened is all there in natural language. And if you design the systems very well, which we have, you are able to see how the agent took the steps to actually go and do this. You can't see that level of thought in a human. Like we know the human's thinking, but you can't actually audit it the way you can an AI agent. You can't audit the conversation between maybe a banker and a teller, or, let's say there's a fraudster that's trying to coach up someone to ask questions or to do things on their bank's behalf at their bank. You could actually see more of how that questioning is happening through an AI agent. So, I mean, my whole thing is I know I'm biased, but I also feel this is very correct, in which I believe this makes it a lot safer. You just lead with having an intelligence layer on top of already all of the reactive fraud prevention that we do. I mean, we also, speaking about partners and Sardine, we use Sardine in our AI agent to be able to check as a new person is adding a payee. Is this person on the sanction list? This is things that banks don't even, a lot of banks are still bringing on Sardine, but with these kinds of experiences built well with AI, you can get this level of fraud prevention just built into an AI agent experience. So we have 10 layers of what we call fraud detection and screening and everything just within the AI side, let alone their existing side. And you can, we talk about fighting fraud. Like a lot of it is getting as much information as you can. And this helps you collect a lot of information to help prevent fraud.
I truly, I see it, I get it. And first, I made a note to say, I love how you were talking about auditing the thinking. There have been numerous times that a transaction has gone through, and whether it was Frontline that allowed it or maybe it was a system, audibly, we've all said as fraud fighters out loud, what were they thinking? Now we can actually go back and see the thinking, and I think that that's great. So why did we allow this to go through? How did we rationalize it? What was the intelligence behind that? And I think that just really provides better perspective from the risk side of things, especially from me as a fraud fighter. I would want to know, how can I trust it? And being able to see that thought process really does help provide that. But you also started to touch on some of the signals or data sources. So I'd love to kind of double click on that. What signals or data sources need to be unified to make, safe decisions in real time?
Your bank will always have existing signals that they look for, right? I think those, if we're talking strictly from an AI agent perspective, you need to be able to orchestrate the AI well to where when it hits those APIs reliably, none of your existing bank signals will change. They're still going to pop up where they will. They're still going to pop up exactly, in the software that they have. If it comes from an AI acting on behalf of a user, I think that might be one of the key things to know, that it was this AI that triggered this instead of this human that was trying to do these things. In terms of, if someone is maybe adding a payee that might not need to, that the bank accounts might not match, which we do with Sardine as well, which is the whole, I believe it's a lot of smarter banking people than me know how this all works. But those are the things of where do you surface this back? The thing I think compliance and audit people have so many different screens that they look at all the time on where these signals exist. We have our own with Payman. I'm sure they have their own elsewhere. Where do you bring all of these things into one place is more, to me, in the design of how you build the AI agent to work with the existing APIs. It's a very good question because it hits on two things. One, you don't have to change much of how you're doing your existing compliance and auditing. That's super important. And then the second is, if this thing is bringing me different signals, how do I surface this and where do I surface this? And I would say that's still being played out. But at the end of the day, you're going to get them on some technology platform that gives you those answers.
Lisa, any thoughts here?
Yeah, I think we'll frame it, I think, from a regulatory compliance perspective in sort of the governance discussion. But I like the push for, it's not a net new way of managing risk, and it's not a net new process entirely, which would certainly feel daunting and feel potentially prohibitive. It's really just adapting existing processes to new channels, maybe just new sources, like Tyllen was flagging. So we can pull a lot of insight from kind of precedents that we have already in place. Like I know we were talking about as a group before, this isn't the first time that the financial services industry has had to adapt to innovation, has had to adapt to new ways of submitting payment instructions, ways of actually moving money kind of in a practical sense. So this is another maybe iteration of that, another way of a consumer or a business, moving money, managing their money, accessing their products. And so it just invites us to look at how to adapt existing programs, existing processes and controls to ensure we're looking at the right data signals. And, the most obvious one, maybe as just a quick example, is, of course, any institution will have a monitoring program from both fraud and AML perspective, monitoring transactions and behaviors for risk. Typically, and Haley, of course, you would know this, we talk about this all the time, that bot detection is usually framed from a fraud perspective as looking for potentially, fraudulent or bad activity. And now we're all thinking about that as like, okay, well, that remains true in some scenarios, but now we're also intentionally asking agents or potentially, bots to perform instructions on our behalf with good intent. So how do we distinguish these things, and how do we adapt maybe our anomaly detection to understand that context, which is certainly tricky, but teams like Tyllen's are trying to help institutions think through this and understand what data signals there are.
I couldn't agree more. I think that this really does. This conversation is going to position one that if maybe we were afraid of that AI in banking, right? This is now going to help prove that this is maybe safer, especially if it's designed properly. If we bring in the things that we need to, if we help that anomaly detection adapt to this new data, or this, not net new data, but just the data sources that we should have been bringing in all along, I think that it's really going to help prove that point. So I definitely appreciate your perspective and love that it really tees up the next part of the conversation, which we're all really excited for. But it's, innovation in banking is accelerating rapidly, but governance frameworks often lag behind. We know this. We all know this. We preach about this and probably go to our therapist about this. But if AI is going to influence or initiate transactions, institutions must answer key accountability questions.
Fraud doesn't live in silos anymore, and neither can the tools we use to fight it. That's where Sonar comes in. Sonar is a member-run fraud intelligence consortium built for today's reality, where people don't just transact with banks and credit unions, right? They move across fintechs, marketplaces, merchants, crypto platforms, and even prediction markets. Instead of only seeing what happens inside your four walls, Sonar helps you understand risk across the entire ecosystem a user touches, financial and non-financial. Here's how it works. Sonar brings together shared intelligence from banks, credit unions, fintechs, exchanges, and marketplaces to create a single unified risk view of an entity. You get a clear risk score, and when you need it, the signals behind that score that explain why the risk exists. And unlike traditional enrichment tools, this doesn't require stitching together a dozen vendors or standing up heavy integrations. You connect once, choose the types of intelligence you want, and Sonar returns a risk score enriched with insights from across where that user actually operates. For community banks and credit unions, this is a game changer. You don't need a massive fraud team or advanced data science resources to benefit. Smaller institutions can simply consume the risk score. More mature programs can dig into the attributes and layer Sonar signals into existing controls. And because Sonar is a member-driven utility, it aligns with how credit unions already operate. through shared governance, shared standards, and shared responsibility for protecting members. Even better, Sonar supports compliant data sharing for fraud and AML, including 314B, enabling collaboration without compromising regulatory expectations. Bottom line, fraudsters move fast and jump between platforms. Sonar helps community banks and credit unions move together with shared intelligence, broader visibility, and better decisions. To learn more or explore membership, visit joinsonar.com.
So for this next section, we're going to do something a little bit different on the podcast. And Lisa is going to play the role of a CRO in a bank that maybe isn't quite familiar with this topic or this area and wants to ask the questions, not to, put up the guardrails and the stop sign and tell them to, no, Uno, reverse your way out of here. Instead, it's really to enable this solution, with intention. So Lisa, I'd love to go ahead and let you take the reins on this part of the conversation.
Sure. Yeah. Thanks, Haley. No, I'm always a little overly excited, maybe when it comes to the idea of risk assessments and enterprise risk. It's an area I've worked in for a while in different contexts. So definitely, when thinking through this topic, my instinct is to frame it, hopefully not in a boring way, from a risk assessment lens. And so if I were the CRO of a bank kind of thinking through this, maybe I'm feeling like, all right, it's coming for me. What do I need to do on this Monday morning to kind of get going and get my team ready? And so where would I think about it? I would start from the core of any compliance program, which is that risk assessment, understanding where the risks are. You can't design controls. You can't really spin up a compliance program without actually understanding the risks. And maybe some, compliance teams are feeling like they don't have necessarily the expertise in-house to kind of, appropriately identify all of the different areas that they might want to be thinking about. That's where I think partnerships with companies like Tyllen's are key. And we'll talk about, third-party due diligence and third-party risks separately, because obviously that comes into play. But a couple different angles before I dive into just some examples of questions to think about. First, I might ask, where might the financial institution be exposed to risks of agentic banking or agentic payments already, maybe without explicit opt-in? This is certainly something that's being hyped up, being talked about a lot. Card networks especially are designing ways for users to interact with these services. Doesn't necessarily need to be coming from the bank directly. So banks, especially banks with, issuance and kind of BIN sponsor programs, should probably be asking where these risks might be presenting without having kind of proactively opted into it. And that's fine, but kind of thinking through how to help your customers navigate that and do that in a responsible way. And then second, and maybe the more kind of long-term project, would be thinking about what your business strategy is for intentionally adopting and enabling these products for your customers. And the best way to leverage, new innovations is to design your risk strategy to work with these new processes and not think about your risk strategy as a way to prevent or kind of mitigate these new processes. Like, we're looking to kind of jump in and adapt and enable this in a responsible way with intention. And so as a couple examples, and I'm not going to run through a full enterprise risk assessment here, that would keep us here for a week and be dreadfully boring for everyone. But a couple key questions that I'll pull out, and then, Tyllen, anything that jumps out to you, would love your thoughts as someone who's probably dug through these questions yourselves and with clients. From an operational risk side, how do our teams, and not just compliance teams, I might focus there, but how do our teams need to adapt to these new products, these new services, these new way of interacting with consumers and business customers? From a more technical side, a specific example might be, how do we handle sort of that circuit breaker kind of feature of potentially identifying maybe a runaway agent, as I've seen it referenced. But for example, if an agent attempts a transaction 1,000 times, whether it was supposed to or not, what happens in your system? For example, does that create 1,000 alerts for someone to run through? Probably another agent, but for someone to run through and manage, or will there be sort of an error management, issue management process in there to kind of break that process? Tyllen, I think you mentioned this earlier, but sort of user access, From a systems perspective, how do we differentiate, we as the bank, how do we differentiate between a user session and an agent session? And why does that matter? So how we interpret that data, how we log that as a specific type of session, where does that matter and where does that have downstream impacts on how we manage that interaction depending on what the instructions are, what the actions are that are taken. For example, if maybe an agent interaction is flagged as risky for any particular reason, are we able to identify that and maybe block the agent's access without also blocking the human's access? Are those distinct or are those potentially problematically intertwined? From a regulatory risk perspective, the big topic, of course, is dispute resolution, and we'll dig into that a little bit more as well. But yeah, how do our systems receive and store these authorizations, these mandates, the context? I was talking about the context. I also loved the audit, the thinking. But how would I do that without having that in my system in some way to be able to go through that as a record of the transaction? So how does our system adapt to pull in that relevant information? And then, thinking of it from Sardine's perspective, how would a bank's risk system leverage that data as well, and potentially build some controls or monitoring around the extra authorization records or data that comes through with an agent-initiated transaction? A fun one. It's a weird way of framing it, maybe liquidity risk. And so from a couple different angles, I think it's really important. I think these risks can be almost entirely mitigated by kind of the right partnership, the right implementation here. But how should a bank think about the risk of an agent initiating transactions so rapidly that it challenges kind of the clearing and kind of the available balance of an account? How is that managed? How does an agent have access to kind of those funds? How do you ensure that there isn't double spending that is possible by using an agent kind of in rapid succession? Because we know that, true settlement, unless we're looking at stablecoin rails, is going to lag far behind kind of an agent's ability to initiate subsequent transactions. And then I think from a more systemic level, which is a bit out of scope maybe, but I like to think about, and Tyllen, I think you talked about this actually a bit in a different talk that I was listening to last year, but the push from some providers to pull funds out of banks and hold them in a distinct wallet for access to agents. If there was, really a high volume of adoption for those types of kind of agent services, that is, a lot of deposits being pulled out of a bank account and being pulled into these wallets that are managed in a sense by agents. And that has at an extreme kind of volume that has impact on the bank's deposits and how they might think about liquidity and capital management. And then I think I'll jump to, there's so many more, but I think I'd jump to third-party risk because I think that's a really key one when it comes to enabling these types of providers and partnerships. And I would want to spend a lot of time with third-party risk teams, vendor management teams to come up with probably a very different maybe questionnaire for these types of partners, and what questions should we be asking in terms of how I might interact and partner with a company like Payment. And this is where maybe, Tyllen, I'd love for you to jump in. Is what kinds of questions do you want clients to ask you? And how do you think about building that trust and ensuring that they're managing your partnership responsibly and that they kind of understand the details as much as they need to of sort of how you work together and enable this product for them?
I think a lot of this is like on the vendor to help guide a lot of the bank. It's too hard and it's moving too fast to know the answers to all of these. But as a vendor, you need to know exactly like what you just did, Lisa, how the bank is thinking about this, and to ask the questions that, like you asked, like, what do I wish the banks would ask me? Like, there's so many things. But how can you know with how fast AI is moving? One of the things we hit on was like, what is the difference between an internal AI agent versus an external AI agent? If I'm a bank now and I'm hearing that these AI agents are, without my knowledge, using people's credit cards to go and buy things, how does that set me up as a bank? Like, there's a reason why today it's very hard to expose your bank's APIs to something like Claude. Like, one of the questions is that if the bank could ask, like, why couldn't I just give Claude or OpenAI my APIs to go and do all of these things? Well, people have tried. And it's very hard, one, to set this up within Claude or OpenAI without like just all the audit and risk that comes into play when it's like someone is interacting with Claude, who is a third-party vendor, who might now have read and write access to APIs to go and do this. Who's at fault if Claude messes up? Are you going to go and sue Anthropic? Like, how does this whole relationship play out? So this is where it becomes very hard to just totally expose your bank's APIs to a third party like this. When it comes to internal, this is where being with the, like, answering all of these questions of, just baseline, do you have a tight MSA or legal contract that understands things that the bank doesn't even know to ask on, like, with AI, is this attacking, like, is this a high critical technology vendor? Is this more on the low critical side? Do you have these kill switches? Like you mentioned, do you have all the ability to shut off a user if they're behaving badly, but not ruin the AI experience for everyone else? This has been, like, as you all had mentioned, the technology side can move pretty fast. The models are moving fast. There's so much on the legal side too that we've just had to also see and do to build out this structure where banks can feel comfortable at the end. If banks are where trust exists, you cannot ruin that trust. And you truly have to believe that the product you're delivering is going to make the bank safer. Not just it, like, we could not be doing Payman if we didn't believe that this technology would improve their overall security experience. And I think that's what, as a good vendor, you do. You don't come in and say, hey, this is something wild. This is cool. How about you guys go and try this? We have our VPs of innovations that are using this that, might be of a different generation than the customers we think might use this. They feel so safe using these things, and they keep coming back to the app. We talk about, like, what will someone use this for? We had one of our clients send our head of product a coffee. He just sent money because she was like, hey, send Akash $7.50 for coffee in New York. And my immediate thought was, geez, coffee is expensive in New York. Like, this is if you can make the experience feel comfortable, if the risk person, you can feel comfortable. If people who've been at the bank can use your product, can go through that period of 3-4 months and be like, this is, like, they start asking questions of, like, if you can get to the point where they start asking questions of not why is it not doing this, but why can't it do this? If you want to give it more and more and more, then you've got a winning product. And then I feel like you can feel very comfortable. And not everyone can do it. It's very hard. You can't, I'd imagine you can't just have another fraud startup that just popped up and banks will, like, trust them out of nowhere to be like, this is it. You also have to have the background and knowledge to be able to do this and kind of the credibility.
Yeah, absolutely. One thing you said there reminded me of, in the open banking conversation at a very high level, we talk about read and write access and kind of the different approaches to giving systems access to, bank accounts, for example, bank account data. Do you find, and maybe what's your opinion on kind of phasing in the use of kind of an internal agent for banking services? Like, is there an interest, and would you say there's a benefit in terms of that kind of building trust by using, in a sense, by starting with maybe read access only and doing sort of really intelligent analytics versus jumping into write access where, the agents are actually able to make changes to and sort of move money on behalf of the user? Is that even worth a conversation, or are you seeing we're at a stage where we're kind of diving right in and we're comfortable with read and write access and sort of combining the full service here?
I used to think so. I used to think that was the approach maybe before, but it's like, I know from our side, the technology is there to do the right access, and that's where the value comes. And I remember, like, there's always this conversation of, like, very heavy payments nerds, which I've been also for a long time now, will say, like, this is a very deterministic system. AI is very probabilistic. You cannot get these two to communicate the same. And my question back would be, like, do you truly think it's impossible? And I can tell you no one will say it's impossible. So then the next step goes to, then it must be very hard. And if it's very hard, then if you do it very right, you have a very valuable product. So if we were just to stop at, it's not impossible, it's hard. Can you do the hard things? We have done the hard thing. And now, how do you make people feel comfortable to just trust this? And the way you do it is you literally try to have them break it every which way possible. And what they find is they can't break it. We are running tests on our own product every single day. We have humans and AIs running tests to make sure, can this right function be broken? And it's really, once you put it in the mindset of, it's not actually at all different from a human accessing an account at a branch on behalf of a person. And then you realize all the benefits you get from an AI doing these things versus a person. And then you also can help the person get better at accessing things once you see how the AI is doing it. And, one of the things on the risk and governance side is, as a vendor like us, showing people, hey, here are the policies. It's not just like, woohoo, this agent can do this. No, but you have control. A lot of what we've even sometimes shifted the framing from trust. It's like, trust is okay, but can the bank control this is the question. Control is where a lot of the trust comes. And it's like, yes, here are all the ways you can control this. Here's an OTP request that's tied back to your bank whenever money's being moved. Anytime that happens, your customer actually has to verify this transaction before it goes through. You mentioned loops. Our AI agents aren't allowed to do loops. These are the different things that help prevent some of those 1,000+ transactions going through. If a payee wants to get added, do you we also require an OTP for the payee, because you don't know if the AI might have hallucinated someone to add. Not only do we require the OTP, we call Sardine to make sure that this AI agent isn't paying the wrong person and that the bank accounts match, because we've been in this for 2 years and because we've seen not how AIs try to fraud the system, but how humans try to fraud the system with AIs. So I don't think the AI tech is actually the bottleneck. It's more preventing bad behavior from humans interacting with the AI at this point.
Absolutely. That reminds me of, and I know you worked in the crypto industry for years, but people would love to frame crypto as risky, as if it was acting on its own.
Yep.
Ultimately, it will always be the human that is attempting to exploit the system that we have to kind of stay ahead of. So yeah, completely agree there.
Yeah. And there's so much in this space that is this tech is not something crazy. And the other part is, it's built already. If I can hit on, it's built already on all the tech you already have. AI doesn't come and totally augment every other experience that you have. If I don't know, because I am also nerdy on this side, OpenClaw is big. If y'all have heard of OpenClaw, its big value is that it could connect to all of your systems and bring them into one place, and it could start interacting with them and orchestrating. Well, all of the policies that exist on those systems are all there. Now it's how do I know that this AI agent is interacting? It becomes very hard with a thing like OpenClaw. It becomes much, much easier as a bank if it's built internally to you first. So instead of thinking versus read versus write, I would think, what can I build internally to understand? And then how do we bring this external? I know many OLBs that have tried to expose their MCP or their APIs as an MCP to a third party, and they've only started with read access. That fails because it's hard technically for a consumer to do this. And second, why are you bringing consumers away from your bank? I think the biggest piece of retention is, how often do people interact with your digital banking provider? If you can increase that, don't send them away. Bring that information back to you and keep improving the experience there.
Thanks for listening to Fraud Forward. Remember, every conversation, every connection, and every insight moves our industry one step closer to stronger fraud defenses. If today's episode sparked an idea, share it with your team or tag me on LinkedIn. I love hearing how you're moving fraud forward in your own organization. Until next time, stay curious, stay resilient, keep moving fraud forward.